Well, after we get done talking about the proteins, let's go talk about the inputs. Again, we had a USDA report today. Not a shocker. I guess we had some Chinese, well, not I guess, I know we had some Chinese news, and I would have said that was really more of a bigger news or a mover to the markets for the grains than the WASD report or the USDA report. But we still want to kind of take a look at the engine, pull this thing over, take a look under the hood, and see what we got. So let's talk corn. That's a big one. Well, it wasn't overly bullish, that's for sure. Now, I've got a psychological point I want to hit in my third point, but first off, let's talk numbers. You'll probably never remember, but we're looking at, we were expecting a yield of around 166.9, 167 we'll call it. We got a 168.2 from the government. So that's bigger, more corn, bigger production numbers as well. So if we got bigger production and more bushels per acre, that's going to be a black cloud or way heavy on the market here. So we did obviously get some Chinese news, but this type of thing is a great example for a young trader to learn about, because the market should be doing something and it's not. It actually rallied is what I'm trying to get at. So if the market rallies when it should be breaking, what that tells you is really a psychological thing, and it's an interesting lesson to learn. You could be dead right? So you have the right position on, you're short corn, you get numbers that are bearish, the market should trade lower, and it doesn't, because what you need to have happen is that you need new sellers to come to the market. Well, we've already had a $1.20 break in the corn market, right? From the highs to the lows. So we're at the bottom end of a $1.20 break, who's gonna come in and sell it even again, right? So the problem is that we've got the funds going into this number short 152,000 contracts. We get numbers that are bearish. So we should trade lower again, and the funds should be on a winner. But the funds need to be let out of those positions by seeing new sellers come to the market. That's hard for people to understand, but they need new sellers to let them out of their positions and or drive the price even lower to make them a profit. Unless you get new sellers to come to the market, sometimes these things end up squeezing as people cannibalize themselves trying to get out. This is a great example of that. So corn actually is trading higher on this news because you've got some of the fund shorts that need to get out and some other short traders that are wondering where the cavalry is going to come from, and they just throw in the towel and they give up and they buy the market back. So that's a great example of how psychologically something can turn even when you got what you wanted. You've been dead right because you got the bearish numbers from the USDA. You know the funds are short, and the market trades higher. That's because after a $1.20 break, you can't bring any new sellers to the market.